But that is the big change, is that rather than looking at two cuts, it so far anyways looks more likely we might see only one through the year, if even that potentially. We have a lot of data all right ahead of the Fed decision that just came yesterday, followed by the Fed press conference. So we will be sure to cover everything that we've kind of seen over this past week or so. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after each of these weekly updates and hopefully share some of the true stories to kind of keep an eye on and what's driving the markets here ahead. Basically, there's a number of data points we're going to get into, but we're going to spend most of our time really talking about the Fed decision, as well as, more importantly, probably the press conference that followed right after. Before I get there, though, we had a flurry of data going back to last Friday all the way through yesterday that all really do play into kind of what the Fed's watching and how some of this might translate. So let me touch on some of that first. First thing I want to cover is the GDP revision that came out on Friday. This did come down to 0.7%. So that did drop quite a bit from the original estimate there. We also had income, spending, and inflation all come out. So personal income was up 0.4%, spending was up 0.4%, and then we had PCE inflation come out, and we basically saw on the headline number PCE inflation up 0.3%, core PCE, up 0.4%. And then we also had PPI numbers, producer price index numbers, come out just yesterday, right ahead of the Fed meeting. And PPI came out up 0.7%, and core was up 0.5%. So both of those, as you might imagine, were a bit of a surprise to the upside for sure. On top of all this, on Friday last week, we also had job openings come out. This ticked up a bit. So job openings also playing a factor into all of this, as obviously the Fed's watching the economy. They're watching the consumer, inflation, and jobs, and really that's what we got ahead of the Fed decision and press conference there just yesterday. So let's spend some time on the Fed situation just from Wednesday there. Basically, to keep this simple to start, the decision was to not change rates in any way. So the federal funds rate remains the same as it was. But the bigger things, I think, are in what is being projected now moving forward, and then kind of in between the lines of some of what Fed Chair Powell shared in the press conference that followed. One of them is that basically the Fed is kind of looking at more of maybe one cut through the year, maybe one cut. Heading into the start of the year, it was looking more likely two cuts was kind of the base case. Here we are now, mid-March, and it looks like we're leaning more towards one at the moment. But keep in mind, again, we still have 9 months, and a lot of data can change over that time. So that absolutely could shift again as the year unfolds as well. But that is the big change, is that rather than looking at two cuts, it so far anyways looks more likely we might see only one through the year, if even that potentially. I did talk about that a little bit a couple of weeks ago. We're almost even looking at the possibility of no cuts through the year. So this wasn't much of a surprise, but something to keep an eye on for sure. In addition to that, one of the things that came out was in regards to the tensions in Iran. And I think this is really important to highlight as well. Our portfolio manager kind of shared this with me prior to this conversation. But basically, one thing that came up is that the Fed is really looking at the situation in Iran likely being a short-term resolution, not sort of short-term resolution, I should say, not tomorrow. If that's the case, they kind of shared, it may not affect a whole lot, but of course they're watching it closely. If it continues or escalates, that's what they're keeping an eye on, and that could put them in an even tougher spot as the year unfolds as well. So that obviously has a number of implications that we're watching closely, but it also may impact the Fed's, path ahead there as a result as well. The other thing to mention is that the Fed also was generally suggesting that we have a strong economy. You've heard from prior press conferences a lot of rhetoric around the employment figures and what's going on there and potential challenges in the labor market. The Fed basically, I would almost say dismissed, that might be a little strong, but basically suggested that some of those concerns are maybe not as strong as they were just recently. They had pointed to the unemployment rate as kind of a data point to reference within there, suggesting that although maybe the growth in the labor market hasn't been what it had in prior years, the unemployment rate really hasn't ticked up significantly. And so they kind of pointed to that showing strengths in the labor market, plus, some of the GDP side of things as well. So I think those were the main takeaways and things to, kind of pull out of that press conference to watch moving forward. Again, if it helps, really looking at, what happens in Iran, as well as it sounds like now, really keeping an eye on the labor market, but maybe more specifically the unemployment rate to see how that changes or not over time and what that may mean for the Fed's path ahead. Last thing I'll mention is just kind of a quick scoreboard of what happened during all of this in the markets. So basically, as the Fed decision was made, and then again, as the press conference unfolded, we saw a couple of things. We saw basically that yields were up quite a bit leading up to the press conference, and then again during the statement and questioning as well. So basically, interest rates up was the general takeaway there, or yields up, I should say. Most of that is because of the projections of less cuts in the future, likely. But he also shared a bit about, watching inflation very carefully and what that could mean longer term. Both of those play a role in yields. We also saw the stock market in general in the US anyways, mostly flat and then really started to change a bit, or sorry, mostly down. And then as the Fed shared their comments, continued to decrease a little bit throughout that as well. And then the other thing I'll mention is that gold was down quite a bit as well. And again, so basically the 10-year spiked quite a bit leading up to and during the press conference. Equities dropped a decent amount and even decreased a little bit further during the press conference. And then gold was down quite a bit throughout the entire day. So hopefully that gives you a good sense of kind of what the markets took from this. We will skip our question of the week this week because we had so much to cover with data and the Fed, but be sure to tune in next Thursday. It is a bit of a slower data week with home sales as the main focus, but we'll be sure to catch you up on that as well as any kind of more broad market updates that are relevant next Thursday. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.